Right, hi everyone. Welcome to the live analysis session brought to you by IC Markets. Right, before we begin today's webinar, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra, and this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years 2019, 2020, and 2021. Right, before we dive into the chart and trading view, let's take a quick look at what's coming up on the economic calendar for this week. There's quite a few things going on, but I just want to highlight the flash composite PMI reports that will be released for the EU, the UK, and US today, 24th of March. Then we also have CPI data out of Australia and the UK on Wednesday, 26th of March. And finally, on Friday, we've got the PCE price index for the US. This is the Federal Reserve's preferred gauge of inflation out on Friday, the 28th of March. Right, so this is the calendar for this week, right? So we've got flash composite PMI reports out today, Monday, 24th of March. We've also got the German iPhone Business Climate Index, as well as the Conference Board Consumer Confidence Survey and new home sales for the US out tomorrow, Tuesday, 25th of March. Inflation data for Australia and the UK drops on Wednesday, 26th, and then and also the UK is also having going to release its annual budget, so that's going to be closely watched as well. And we've got GDP data and core CPI data for Japan. So US GDP data and Tokyo, Japan core CPI data are on Thursday. And finally on Friday, we have retail sales for the UK and GDP data for Canada, as well as the PCE price index as well. Right, so now with that, let's move on over to the charts and trading view. Right, hi everyone, hi Ajay, hi Shal, good to see you as well. Do remember to smash the like button, right? As well as dropping a request in the chat box here. Right, so as usual, we'll start the analysis with the dollar index on the daily time frame. Then we'll work our way down to a few of the major currency pairs before looking at the commodities, crude oil, and gold, touching on the indices, and we'll look at crypto and Ethereum. Looking at Bitcoin and Ethereum as well. All right, hi, there's a request for Aussie and Bitcoin as well. All right, great. So, of course, we'll start off with the dollar index. I will start off with the dollar index first. Then we'll work our way down through some of the major currency pairs. We'll start off with the Aussie, and then after that we can go over to crypto, looking at Bitcoin, and then come back to the commodities. All right, so looking at the dollar index, we have seen demand for the dollar tank since mid-January, right? Basically, since President Donald Trump has come into office, 20th of Jan, his inauguration was on the 20th of Jan, and since then, uh, the dollar has fallen quite sharply. Of course, there was pretty wild swings in the second half of January, but nevertheless, since its peak in 13th of Jan, peak to trough, the dollar index has lost well over 6%, right, dropping almost 700 pips in the process here, and especially in the last couple of weeks, right, or especially throughout March, right, the dollar index has dropped quite significantly, falling over 4%, right. So last week, right, the dollar index stabilized on well, since last Wednesday or 2 Wednesdays ago, sorry, since the 12th of March, the dollar index has stabilized at around 103.30, finding a floor and rebounded quite strongly in the second half of last week. Right, managed to close above 104 last Friday, but today as markets reopen, it looks to be pulling back slightly. However, I think this recent move here was quite oversold, right? Hence, the dollar index managed to stabilize last week and rebound quite strongly, right? As short traders close out their shorts as well, right? It can lead to short covering rally, right? So relief rally, which looks to have played out last Thursday and Friday. Now, whether this rally has further uh, legs to run, right? We'll see in the next couple of days. However, I still feel that any pullback for the dollar index, right, is likely to be supported, right? The pivot level at 103.29 is a significant overlap support. Why is that the case? Previously, this level functioned as a resistance back in August of 2024, and then after breaking higher in mid-October of last year, it managed to find support not once but twice. You can see almost like a nice double bottom being formed here in mid-October, and then again in the first week of November. So this creates a nice overlap level, which the dollar index has found support since Tuesday, 11th of March. So since 11th of March, it has again formed a nice double bottom here, and I think the dollar index should at least remain elevated, at least above the pivot over the next few days. So the pivot at 103.29 is actually an overlap support. Slightly below the pivot, the first support at 101.80 pretty much is a pullback support level. Previously, this level functioned as resistance. You can see two swing highs, mini swing highs taking place here. First of which was on the first week of September 2024, and the second was in mid-September. So what was previously as resistance can now potentially function as support once price broke higher back in October of last year. So the first support at 101.79 is a pullback level. In terms of resistance, looking at the level across 105.80, right, there's a nice pullback resistance. Previously, this level functioned as a nice double bottom here back in end of November 2024 and early December, before dollar index climbed strongly once again. After breaking lower in the first week of March, what was previously a nice multi-swing low support could now potentially function as resistance. So the first resistance at 105.78 is a pullback level, which is accompanied by not one, but two Fibonacci retracements, right? We have a Fibonacci confluence here, which is identified by the 38.2% retracement and the 61.8%. Now, the 38.2% retracement was found starting from this swing high on 3rd of Feb, ending with the swing low here on the 18th of March. And the 61.8% retracement was found by starting from this swing high on the 28th of Feb and ending with the swing low on the 18th of March. Right, so the confluence of this Fibonacci confluence adds further significance to the strength of this resistance barrier here. Right, so we can see here dollar index has rebounded quite nicely in the second half of last week. It looks to be pulling back slightly today. However, I still think the bias for the dollar index is to the upside, at least for the next couple of days, right? I think demand for the dollar should gradually pick up, and I think dollar index is likely to remain above the pivot at 103.30, which is an overlap support. Okay, so with that, let's move on over to the Aussie, right? There's a request to look at Aussie as well. So we can see here, after falling sharply since last Tuesday, right, the Aussie pretty much dropped, let's see, peak to trough last week, it dropped well over 2%, right, dropping 130 pips. But the Aussie seems to could stabilize today, right? As markets reopened, it gapped a little bit lower to open at about 62.60, and has managed to climb above the 63 cents mark earlier today. Right, so it seems to be hovering around the 63-cent mark, and of course, if dollar index is pulling back slightly today, right, then Aussie is quite likely going to continue to edge higher. However, I think the pivot, right, there's a strong resistance, almost like a strong multi-swing high resistance for the Aussie at around 64 cents. Right, the first swing high resistance took place on 21st of Feb, and the second swing high resistance took place on 18th of March. Right, so if we do see the Aussie rise up towards this pivot level once more, I think this is where it could stall and potentially reverse the drop lower. Right, so the pivot level at 64 cents is a multi-swing high resistance that's accompanied by a Fibonacci retracement at 38.2%. Right, so we can see here that this retracement level was found starting from this swing high on 30th of September and ending with the swing low here on the 3rd of Feb. We can see the 38.2% retracement accompanying the pivot, which is a multi-swing high resistance, pretty well. Higher up, there's an overlap resistance at 65.37. Right, previously, this level functioned as support not once but twice at the end of October and in early November. Once price broke underneath this level in mid-November, this level proceeded to function as resistance. So this then creates a nice overlap. So the first resistance at 65.37 is an overlap resistance that's accompanied by a Fibonacci retracement at 50%. All right, hi Ryan. Yeah, we definitely, yes, we joined us just in time. We're just currently covering the Aussie, and then we'll cover the pound after this as well. Right. So we can see here, right, with dollar index pulling back today, right, I think Aussie could retrace a little bit higher. However, I think it's quite likely to remain elevated, restricted, sorry, underneath the pivot at 64 cents, which is a multi-swing high resistance. That's accompanied by Fibonacci retracement at 38.2%. Higher up, first resistance is at 65.37. It's an overlap level. That's accompanied by a Fibonacci retracement at 50%. And in terms of support, there's a nice swing low that was formed here in the first week of March, right? At the end of Feb, first week of March, as the Aussie fell sharply, right? It managed to stabilize around the 60 cent level mark and made a nice bullish reversal here. So this is where the first support comes in, and it's also accompanied by a Fibonacci retracement at 61.8%. This retracement level was found starting from this swing low here on the 3rd of Feb, going up to the swing high on the 21st of Feb. Right, so these are the key levels here. These are the key levels here for the Aussie on the daily time frame, right? After gapping lower today, it has closed the gap and risen quite strongly, briefly climbing above the 63 cent mark. And I think this currency pair could continue to edge a little bit higher. However, I think it's going to run into resistance once more at the multi-swing high, which is identified by the pivot at 64 cents. All right, let's look at the cable, right? With dollar index losing steam, right, with demand for the dollar uh, tapering off slightly today, that of course means currency pairs like the Aussie and the pound are likely to be climbing. Similarly to the Aussie, cable gapped lower as well today before closing the gap strongly and climbing as high as 1.2960. And once again, I think this currency pair is likely to remain elevated today. However, I see strong resistance at 1.3046. This is a strong overlap resistance which previously functioned as a swing high resistance in mid-July of last year, then functioned as a strong swing low support in mid-September, and then functioned as support as well in October, after which, after breaking lower, it functioned as resistance in the third week of October, and then as resistance at the end of October and early November as well. So this creates a very significant overlap level at 1.3046, which we have identified as the pivot, and is accompanied by a Fibonacci extension at 127%. So this extension level was found by starting a retracement, right, by drawing a retracement from this swing high on the 6th of December down to the swing low on the 13th of Jan. We can see that the extension at 137% sits pretty close to the pivot, which is an overlap resistance, and it's pretty much exactly where cable stalled last Wednesday and Thursday, right? As cable rebounded strongly at the beginning of last week, it ran into resistance pretty much at exactly the area identified by the Fibonacci extension at 137%. Right, all right. Hi, Trading Bus. Good to see you as well. Glad to see all of you joined us. Good to see familiar faces once again. Right, so basically, I think cable is quite likely to remain restricted underneath this pivot here, at least in the first half of the week. Right, it's a strong overlap resistance that's accompanied by a Fibonacci extension at 127%. Higher up, the first resistance at 1.3260 is identified as a pullback resistance. Previously, this level functioned as a swing high resistance on 28th of August, and after breaking across it a couple of times, this level could now function as a pullback resistance here. And in terms of support, right, when I look across the level at 1.2776, I see a nice pullback support level. Previously, hang on. Right, previously this level functioned as a significant swing high resistance in mid-December, and then after breaking higher on 5th of March, this level could now potentially function as a pullback level. Right, not only is a pullback support level, it's also accompanied by a Fibonacci retracement at 23.6%. Right, so this retracement level was found starting from this swing low on the 13th of Jan, going up to the swing high here on the 20th of March. Right, so we do see the Aussie, the cable in a strong uptrend, right? In fact, I think we could probably even identify a nice bullish channel, right? I think, yep, we could probably even identify a pretty decent bullish channel as well. There we go, pretty decent bullish channel for the cable. right? So it's been in a nice uptrend since 20th of January, but it's however, this level here at pivot, the pivot here is an overlap resistance. It's going to be a key barrier. It's going to be a key barrier for price action for this currency pair here. All right, so these are the key levels for cable. We also had a request. Okay, so we've covered the Aussie cable. There's also a request for Bitcoin. So let's move on over to crypto. Right, so you can see here, right, after forming its latest intraday all-time high back on 20th of Jan, right, Bitcoin hit $109,547, and since then it's actually declined quite sharply, right? This fall from peak to trough was as much as 30%, right? A huge drop, falling 30% of its latest intraday all-time high, which was formed on 20th of Jan. Since then, we've seen Bitcoin stabilize, right, at around the 80,000 mark, right? First bouncing off this level at the end of Feb, and then again stabilizing in mid-March as well. So there seems to be a lot of buying support here at around the 80,000 mark. And since then, over the weekend, it looks to be climbing pretty strongly, right? However, I see a strong resistance at 94,000. So if anyone who's gone long on Bitcoin, for example, right, perhaps over the last 10 days or so, right? If you got Bitcoin, if you got long on Bitcoin at around 80,000, I would identify a potential take profit target, right? Your first potential take profit target can be identified in the pivot. The pivot at 94,689 is a strong overlap resistance, right? Previously, we could see this level offering support here from the 9th of Feb till the 21st, and after giving way, we can see it function as a strong resistance, right? A nice swing high being formed here in the first week of March, creating a strong overlap barrier that's accompanied by a Fibonacci retracement at 61.8%. So this retracement was found starting from the intraday all-time high on 20th of Jan and ending with the swing low here on the 11th of March. We can see that the 61.8% retracement, right, sits pretty close to the overlap resistance, which is the pivot. And of course, beyond the pivot, the next major resistance for Bitcoin sits at $107,885. It's a multi-swing high resistance, with the first swing high resistance being formed on 17th of December last year, and of course, the second swing high resistance being formed in the third week of Jan. Right. So once again, right, Bitcoin looks to have Bitcoin has found strong support at around the 80,000 mark. Twice, right, a couple of times at the end of Feb and early in mid-March, and buyers look to be coming back in. So I think this coin is likely to climb higher, right, at least in the first half of the week, and should it reach the pivot, right, should it reach the pivot, which is at around $94,600, I think this is where it's a good area to identify as the first potential take profit target for any long positions on Bitcoin. Right. Let's see. Okay, we've got requests for gold, US 100 and US 30 as well. Right, let's quickly cover Ethereum and then we can move on over to the commodities, starting with gold, crude oil, and then we'll jump over to the indices. Right, and take note, right, Bitcoin continues to trade underneath the red Ichimoku cloud, which currently highlights the ongoing bearish momentum. And at the same time, from 20th of Jan, we can see a clear series of lower highs and lower lows. In fact, I think I should probably highlight this downward channel as well. It's a pretty decent downward channel here, right? Pretty decent downward channel that I would like to highlight. And we can see here, should we see Bitcoin break through, right, break above the upper trend line of the downward channel here, right, this is quite likely to trigger a stronger move to the upside, right? So take note, this is a key level that I'll be looking at, which is at around pretty much 89,000, right? If you do see Bitcoin make a clean break above the upper trend line of the downward channel, right, I think we're going to see a lot more stronger momentum, pushing it up towards the pivot at around 94,700, which is an overlap resistance. So take note of this downward channel for Bitcoin, as well as the upper trend line as well. A clean break above this is quite likely to see further buyers come in and push Bitcoin higher. All right, let's move on over to Ethereum. Similarly, Ethereum has found a floor at around $1,840 in mid-March, right? If you zoom out, is this a major level that we see? No, there's no real major level that we can associate from the past, but it does seem to have formed a nice trough here, right? A nice trough has formed in mid-March, and we can see Ethereum climbing higher, very likely being pulled up by Bitcoin as well, right? So Bitcoin is pulling up Ethereum, and we can see that this coin continues to remain in a prolonged downtrend, right? Especially since after hitting 4,100 in mid-December, Ethereum has shed well over 55%, right? Dropping nearly 60% over this course. Take note, 4,100 is not the intraday all-time high for Ethereum, right? The intraday all-time high for Ethereum was actually formed in November of 2021, and that price was at around $4,900. Right, so there's still a huge drop for Bitcoin. Sorry, for Ethereum, falling over 55%, right? And it's rising up towards, and it continues to trade in a prolonged downtrend, right? We can clearly see a series of lower highs, lower lows since mid-December. And of course, we can see that Ethereum continues to trade underneath a red Ichimoku cloud, which highlights the ongoing bearish momentum. With that said, right, we can probably identify another significant bearish channel as well for Ethereum here, right? So the intersection of the Ichimoku cloud, the red Ichimoku cloud, the upper trend line of the downward channel, and the pivot, which is a pullback resistance, identify a strong resistance barrier, right? And this is going to be a pretty strong resistance barrier for Ethereum, right? So if you've got long on Ethereum as well, right, perhaps should it reach towards this intersection, which is around $2,500, this is where you can potentially identify your first take profit target for this coin, right? Take note, it continues to trade in a prolonged downtrend. It could approach an intersection uh, identified by the downward channel, the upper trend line of the downward channel, the pivot, which is the pullback resistance, the Ichimoku cloud, and the 38.2% retracement, identifying a potentially strong resistance barrier here. Beyond that, beyond the pivot, there's another pullback resistance at $3,040. This pullback resistance level is accompanied by a Fibonacci retracement at 50%. So once again, Ethereum being pulled up by Bitcoin, right? And as, of course, if we do see Bitcoin break above its downward channel here, that's very likely going to cause Ethereum to push higher as well. But yeah, I think this is where Ethereum could potentially stall once again, right? Take note, Ethereum has been significantly weaker, right? Out of the two coins, uh, and I think overhead pressures are stronger for this coin, and it's likely to fizzle out at around 2,600 once again, right? Probably maybe this week or maybe early next week. All right, so that's crypto. Let's move on over to the commodities. Okay, let's start with crude oil. XTI USD is an instrument that tracks the WTI crude oil futures, and we can see that since since mid-Jan, crude oil has lost well over 17%, I believe, yeah, or nearly dropping 20%, right, in a matter of 3 months, right, dropping nearly, oh well, about 2 months, 2.5 months, dropping nearly 16% or 20%, sorry. Right, it's a big drop in crude oil, especially after Donald Trump announced an executive order, right, on 20th of Jan. On 20th of Jan, uh, President Donald Trump was inaugurated into the White House, and he signed off on an executive order which signaled an expansion for oil and gas production in the US. So with higher supply potentially coming into the markets, and of course combined with overall weaker demand, right? Global demand for crude oil has been relatively weak, right? Put that all together, and we've seen energy prices come under significant overhead pressures, causing crude oil to drop down as low as $65 and 50 cents per barrel here. Right, since then, since 11th of March, crude prices seems to have stabilized. It's retracing higher. However, I think this commodity is likely to remain under pressure, and should it reach the pivot level here, the pivot level at $70.11, this is where I think crude oil XTI USD could likely fizzle out once again and reverse to resume the downtrend. Now, This Fibonacci retracement was drawn from this swing high on 15th of Jan, going down to the swing low here on the 5th of March. Looking at all the fibs, and we can see that the 50% retracement aligns well with another swing high resistance that had taken place here on 21st of Feb. This is where the first resistance has been identified. Right, we can see here. What I would also like to highlight is it does look like crude oil has broken out of this downward channel here. Right, it was trading in a significant downward channel, and it made a bullish breakout last Thursday. So I think this is going to give a little bit of tailwind for crude prices here, at least for the first half of the week. But perhaps where I could run into some serious resistance would be around the pivot at $70.10. So anyone who's gone long on crude oil, right, perhaps who's gone long on crude oil as of last week, right, identifying your first take profit target at around the pivot, which is $70.10, would probably be a suitable area to do so. Right, and in terms of support, the first support for XTI USD, right, comes in at $65.64. This is a very significant multi-swing low support, with the first swing low taking place here on 10th of September, and of course the second significant swing low taking place being formed from 5th of March till the 11th, right, a strong base being formed here. Right, so these are the key levels for XTI USD, right? This is the instrument that tracks the WTI crude oil futures, and I think crude oil could have a little bit of tailwind today, right? Especially after breaking out of this downward channel last Thursday. Crude oil gapped lower this morning. It looks to have filled the gap, but perhaps it's got a little bit more legs to run, right? Especially after making this bullish breakout out of this prolonged downward channel. And I think where it could finally run into some serious resistance is the pivot. It's a mini swing high resistance here that was formed on 28th of Feb, and that level is at $70.11. All right, now let's move on over to gold. Right, XAU USD is an instrument that tracks spot gold futures, and we can see that after making its latest intraday all-time high last Thursday, 20th of March, right, this level was at $3,057.57 per ounce. Since then, gold prices have fallen quite sharply, especially last Friday, and look to be consolidating today. Right, it fell as much as almost 2% in a couple of days, right? Last Thursday and Friday, before stabilizing above $3,000 per barrel. However, should we see gold prices pull back even deeper, right? Pull back towards the pivot. The pivot at $2,954 is a pullback support level. Previously, this level here functioned as a strong swing high resistance on 24th of Feb, and then after breaking higher on 13th of March, this level could now function as a pullback support, and it's also accompanied by a Fibonacci retracement at 23.6%. This retracement level was found starting from this swing low. This retracement level was found starting from this swing low here on 14th of November, and of course ending with the intraday all-time high on 20th of March. Right, so the pivot is a pullback level accompanied by Fibonacci retracement 23.6%. If we do see gold prices, spot prices pull back towards this level here and stabilize, this is where we can identify another decent opportunity to go long on gold. Right, as you can see, price continues to trade above the green Ichimoku cloud, highlighting the ongoing bullish momentum, and it's been in a strong bullish uptrend, especially since 20th of December. And of course, if you zoom out all the way, well, if you go onto the weekly chart, and you can see gold has had a huge run up since the end of 2022, right? Of course, there have been periods of strong corrections and also periods of consolidation. Nevertheless, it's been in a strong uptrend, whether you look at it on a weekly or daily time frame. Right, so we've identified the pivot. Pivot is a pullback level at $2,954, accompanied by a Fibonacci retracement at 23.6%. If we do see gold prices pull back even deeper and stabilize at the pivot and the 23.6% retracement, it'll help us identify a better opportunity to go long on gold. It's looking slightly below. First support at $2,790 per ounce is a pullback level. This level previously functioned as a significant swing high resistance back in October of 2024, right? And it finally got taken out at the beginning of Feb. So it took about 2 months, slightly over 2 months before breaking higher. So what was previously a swing high resistance can now potentially function as a pullback. And that's how the first support has been identified. And it's also accompanied by a Fibonacci retracement at 50%. Right. And the first resistance has been identified as by the Fibonacci projection at 61.8%. And we can see here the intraday all-time high was formed at $3,057, and this projection level was found by running using the Fibonacci projection tool and starting from point 1, this swing low on 14th of November, going up to point 2, this high on the 24th of Feb, and ending at point 3, this swing low on the 28th of Feb. Right, that's how the first resistance has been identified. And if you look at the other projection levels, basically which are 78.6 and 100%, we can see that they sit at 3,165 and 3,250 respectively, right? So these projection levels can be used in the identification of potential resistances, which in turn can be used as potential take profit targets, right? So should we see gold prices rebound off the pivot and climb higher, right? We can target the 61.8% Fibonacci projection as the first take profit target. And of course, should it continue to climb higher, we can then aim for the 78.6% projection. Right, so these are the key levels here for spot gold. On the daily time frame, the bias for gold is still to the upside, right? Very strong bullish momentum, but of course with strong corrections along the way, right? We can see here the most recent one was at the end of Feb. This correction was, or this pullback, sorry, was about 4.2% here. This is a pretty strong pullback before prices consolidated and climbed, made a strong rebound. This rebound from peak to trough was as much as 8%, right? Nearly 8% here. And we saw a much deeper, almost a strong correction here, 9% back in October till mid-November here, right? So we can see, although prices have moved up very sharply, there have been strong pullbacks and corrections along the way. Right? Perhaps this is what we're looking at now is probably another one of those corrections here or pullbacks. And should we see spot gold hit the pivot once more or hit this zone here, we can probably expect prices to stabilize once more, helping us identify a decent opportunity to go long on this precious metal once again. All right, so these are the key levels for XAU USD. Let's move on over to the indices. Starting with like we've got requests for US 100, US 30 as well. All right, so let's start with US 30. Okay, so US 30 is the instrument that tracks the Dow Jones futures, Dow Jones Industrial Futures, and we can see here Dow Jones had made its intraday high on, there we go, on 4th of December last year, right, at around 45,105, and since then it came close to it at the end of Jan and early Feb, but fizzled out once again, right? And it has made a huge correction here, right, since the end of Jan till mid-March, right? Pretty strong correction here, falling 9.7%, but this index looks to have stabilized at around 40,900 and has rebounded quite strongly. We can see that futures have gapped higher today, right? Equity futures, or at least US equity futures, have gapped higher and looks to be pushing up as well. So if anyone's been long on US 30, right, especially after forming a nice swing low here, right, we see a nice trough being formed here. This was on in mid-March, 13th, 14th of March at around 40,900. It has climbed quite nicely. So if you're still long on US 30, right, and if you see further bullish momentum, right, I would try and target a potential take profit area close to the first resistance, which is around 43,200. Right, the first resistance is an overlap level, it's an overlap resistance that's accompanied by a Fibonacci retracement at 61.8%. We found this retracement starting from this swing high on 31st of Jan, going down to the swing low here on the 13th of March. It's a nice overlap resistance accompanied by 61.8% Fibonacci retracement, helping us identify a strong resistance barrier. And of course, should we see US 30 push on even higher, right? This is where I would target a potential take profit zone. Looking slightly below, there's another significant swing low that was formed here, a nice trough being formed here in the second week of September at around 40,200. So that's how the first support has been identified. Right, let's try and see if there's any Fibonacci retracements that we can use. Let's start a retracement starting from this swing low on 5th of August last year, going up to the intraday all-time high on 4th of December. Taking a look at all the fibs, we can see that as the US 30 pulled back sharply, it stabilized at around the 61.8% Fibonacci retracement. They're stabilized exactly above it, but around that region, right, giving us a little bit of confidence that this level, this retracement level here, did help to stabilize price. Right, so maybe I'll just keep the 61.8% here just to give us an indication of where price did manage to stabilize and find the floor. Alright, so that's the US 30. We've seen equity prices sort of stabilize at the end of last week and looks to be pushing higher. Right, so that's US 30. US 100, okay, so US Tech is the instrument that tracks the NASDAQ 100, which is also similar to the US 100, right? So take note. Oh, what do I have this here? Apologies. This is probably not mine. Okay, nevertheless. Okay, so similarly to US 30, right? After running through resistance in the first week of on mid-Feb, we've seen US Tech fall sharply. Remember, US Tech is the instrument that tracks the NASDAQ 100 futures, and this index made its latest intraday high on 18th of February, and it dropped as much as 14%. This was a very strong correction here, dropping nearly 15%. Right, intraday all-time high is at 22,237, formed on 18th of Feb, and we see this index finding a nice floor at around 19,250 in mid-March. Right, so US Tech, just like US 30, has found a nice floor here. Right, so it has bounced off the pivot. The pivot is a swing low support. Right, the pivot is a swing low support. And we can see that US Tech has also gapped higher and is pushing higher as well. Now, in terms of the first support, there's a very significant swing low that was formed here back in September of 2024, right? After this strong pullback here, US Tech stabilized around 18,300 before bouncing very strongly. So this is where this first support for US Tech sits. That's at 18,297. Now on this uptrend here, right, we can run a Fibonacci retracement from this swing low on 5th of August going up to the intraday all-time high on 18th of Feb. Looking at all the fibs, right, we can see that the 61.8% Fibonacci retracement is pretty much where US Tech stabilized, finding a nice floor here. And we can also see the 78.6% retracement aligning very well with the swing low that had taken place on 9th of September, which is the first support. So we're going to keep 61 and 78.6% retracements in the analysis. And now what about resistance? Right, I see a pretty decent pullback level here, pullback resistance level at around 20,418. This is where I would label the first resistance, and this is also where we can identify a potential take profit target, right? So if you've been long on US Tech since mid-March or perhaps from the end of last week, right, and if this index can continue to push higher, I would try and target the first resistance, which is around 20,400, as a potential take profit target area. Now on this downtrend, we can also run a Fibonacci retracement starting from the intraday all-time high on 18th of Feb, going down to the swing low here on 11th of March. Looking at all the fibs, we can see that the 38.2% retracement sits pretty close to where the first resistance sits. Right, so I would identify the take profit target or the take profit zone between 20,300 and about 20,400 here. Right, the first take profit zone for long US Tech, being long US Tech, can be identified in this zone, bounded by the 38.2% Fibonacci retracement. and the first resistance, which is a pullback level. Right, so the key levels here for US tech, looking for US equities to bounce higher, to continue climbing higher, especially US 30 and US tech. And if you look at US 500 as well, very similar price actions, finding a floor at around 5,530 in mid-March, close to the 61.8% Fibonacci retracement once more, and very similar to US tech, and also very similar to US 30. All of these indices stabilizing at around the 61.8% Fibonacci retracement, right? Otherwise known as the golden ratio. Right, so we've covered gold, US 100, US 30, oil as well. Few of the major currency pairs, the dollar index, and crypto. Is there anything else you guys would like uh to go through? Right, any further requests? Right. Okay. If not, then I'll continue with a couple of other instruments. But before we move ahead, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue with a couple of more analysis. All right, great to see all the responses coming in. Truly appreciate it. All right, okay. If there's no further requests, then all right, great. Hi, Augusto. Yes, I was just about to cover dollar yen. All right, great time. Right, okay, I'll definitely cover that because I was just about to jump into that as well. Right, so let's move on over to dollar yen. Right, so similarly to well, looking at dollar yen, it has found a floor at around 147.15. Right, this level previously was a swing high resistance back in September 2024. And as prices was falling down towards this level here, what was previously a swing high resistance could function as a pullback support, which is what has played out very nicely in mid-March, right? We can see a nice swing, low being formed here, a nice trough being formed here. So once price hits this level and rebounds off it, right, or reverses off it, we can now identify this as a significant overlap support, which has been identified as the pivot, right? So the pivot is in fact a significant overlap support. Dollar yen has bounced off this level very nicely, right? It's bounced off the level very nicely, and it has also broken out of a very significant downtrend. We can see here since 10th of January, right? Oh, sorry, it's about to break out of a very significant downward channel. We can see here a couple of touches to the upper trend line of the downward channel and a few bounces off the lower trend line as well. And it's looking to make another bullish breakout today. Right? You can see here there was a attempt on Wednesday, 19th of March. This was a failed attempt. Perhaps this time round we could see a much stronger push for dollar yen. And if we do see a clean break out of this downward channel, right, then I think it's very likely going to make a strong run towards the first resistance at 151.23. This is an overlap resistance that's accompanied by Fibonacci retracement at 38.2%. Right, so this retracement level was found starting from this swing high on 10th of Jan, going down to the swing low here on the 11th of March. And you can see the 38.2% retracement accompanying the overlap resistance very well, right? So this is, so if anyone's long on dollar yen and if this currency pair could continue to climb higher, I would identify a take profit target close to around 151, right? Close to 151 here, a very strong overlap resistance accompanied by Fibonacci retracement at 38.2%. Slightly below, looking slightly below the first support at for dollar yen comes in at 144.84. This level previously was a resistance barrier back in the third week of September, and after which, after breaking higher, right, this level can potentially function as a pullback support, and that's how the first support level has been identified. All right, okay, so these are the key levels here for dollar yen. It had been trading in a prolonged downtrend, right? We can clearly see a series of lower highs, lower lows since the second week of January. However, it looks to be making a strong bullish breakout today, right? We can't really tell. by end of tomorrow we should know, get a bit of better clarity as well. And I would like to also highlight this ascending trend line here, right? Pretty decent ascending trend line to take note of to see whether this upward momentum is likely to continue, right? So dollar yen is trading at a pretty important juncture here. It's trying to make a bullish break through the downward channel, and at the same time it is respecting this ascending trend line, right? If either one gives way, that's going to give us the direction for this currency pair. So if we see dollar yen pull back and break below the ascending trend line, then I think this downward momentum is likely to pick up further, and we could see dollar yen resume the downtrend towards the pivot, which is an overlap support. However, if we do see dollar yen manage to stabilize above the ascending trend line, it's likely to grind higher, potentially towards the first resistance at 151.23. So it's a pretty critical juncture, I would say, between support and resistance, whether it's going to make a bullish breakout above the downward channel, right? Or is it going to break underneath this green ascending trend line and resume the downtrend. Right, looking at dollar index, demand for the dollar looks to be pulling back, right? Today on Monday, demand for the dollar looks to be pulling back, but I think this index is likely to remain above the pivot at 103.30, at least for the first half of the week. And I think dollar yen should also remain somewhat elevated, right? And if it can stay above the ascending trend line, then we've got a good chance that this currency pair can make a break out of this downward channel and make a good run towards the first resistance at 151.23. Alright, so these are the key levels here for dollar yen. Let's see what else can we cover. Let's take a look at the euro, right? Let's take a look at the euro. Similarly for the euro as well, after surging beyond 1.0950 last Tuesday, right, it's run into resistance. Right, the pivot is a very significant overlap resistance. Previously, this was a swing high resistance in 11th of March, on 11th of March 2024. Another swing high resistance here in 18th of July. Resistance once more in the first week of August. And then after breaking higher in mid-August, functioning as support here on 15th August. A little bit of consolidation here as well on 4th of October. And then once breaking underneath again at the end of last year or in October, this retracement to the upside stalled at 1.0950, creating a very significant overlap resistance, which is where the euro has once again stalled, not once but twice. First, it stalled on 11th of March, and then it stalled at the end of last week, or the second half of last week, Wednesday and Thursday. Right, so the pivot at 1.0948 is a very significant overlap resistance. It's made a strong bearish reversal of this level. Last Wednesday, right? However, this currency pair is holding up today as we speak, right? So any retracement to the upside, right, for the euro is likely to stall once again, right? This is a very significant resistance barrier here. And of course, similarly, I think the dollar index is likely to stabilize, maybe around the pivot, at least for the first half of the week, and it should remain somewhat elevated. And that means overhead pressures for the euro is likely to remain in place. And the first support on a daily time frame for the euro comes in at 1.0675. And we see a nice swing low being formed here, right? A very nice trough being formed here between 14th of June till the 28th of June for a period of nearly 10 trading days or so. And then finding support here once more on 6th of November and then again on 8th of November. So this level is likely to function as a pullback level, pullback support level that's accompanied by a Fibonacci retracement at 38.2%. So this retracement level was found starting from this swing low here on 13th of Jan, going up to the swing high on the 18th of Feb. Right, so we can see the 38.2% retracement accompanying the first support quite well. Beyond that, beyond the pivot, which is an overlap resistance, I spot another overlap resistance, and that's at 1.1110. You can see resistance here being formed on 5th of September. Then I see support being formed here in mid to end September, creating a pretty decent overlap level that we can use in the identification of the first resistance. So take note, we've seen the euro pull back sharply since last Wednesday. It has consolidated found a stabilized today at around 1.0830. Looks to be retracing higher towards the pivot once more. This is why I think it could stabilize. This is why I think it could fizzle out once again and make another pullback. Similarly for the dollar index looks to be pulling back today, but I think it's likely to stabilize at around the pivot of 103.30. Right, okay, let's see. There's anything else to cover? Right, okay, let's see. We've covered dollar index, the euro, cable, Aussie, crude oil, gold, US 30, US 500, Bitcoin, Ethereum. All right, let's cover DEX, right? We've not covered DEX. The 40 is an instrument that tracks the DEX futures, and we can see here that it's made its latest intraday high, latest intraday all-time high. Which is the highest point for. Okay, latest intraday all-time high was formed here on 18th of March, right? 18th of March was where the intraday all-time high was formed. And since then, it has pulled back quite sharply, right? DAX has dropped, I think, from peak to trough, quite a pretty decent pullback of over 3%. And it after climbing a little bit higher today, right, it looks to be pulling back as well. So although the DAX remains in a prolonged uptrend, right, we can clearly see a very strong uptrend beginning from August last year. And at the same time, the index continues to trade above the green Ichimoku cloud, highlighting the ongoing bullish momentum. However, we can see that it is, taking a little breather here. And should we see this pullback deepen even further, falling towards the pivot at 22,177. I think this is where we can identify a pretty decent buy opportunity for the DAX once again, right? This pivot level at 22,177 is like a multi-swing low support. You can see the DAX bouncing on this level several times here since 20th of Feb, right? And then bouncing again on 28th of Feb and then on 12th of March as well. So pretty decent support level at 22,177, almost like a multi-swing low support. That's accompanied by a Fibonacci retracement at 23.6%. Sorry. So the intersection of the pivot, which is a multi-swing low support, the 23.6% Fibonacci retracement, and the Ichimoku cloud itself helps us identify a pretty strong support zone. And should we see this pullback extend even further, I think we could see the DAX stabilize around this support zone. And if that were to happen, it would help us identify a potential opportunity to go long on the DAX once more. Below the pivot, which is a multi-swing low support. There's another multi-swing low support. I see a nice double bottom being formed here. First on 27th of Jan, and then again on the 3rd of Feb. Right, nice support area here, accompanied by a Fibonacci retracement at 38.2%. So another strong support zone at 21,293. Now, beyond the intraday all-time high, right? The first resistance is actually a multi-swing high resistance at 23,360. First swing high resistance being formed on 6th of March, second being formed on 18th of March. Now, beyond this resistance, how could we identify the next potential area, right? In such a scenario, right? Since we don't have any other levels that we can reference, there's no other swing high resistance or overlaps that we can reference. We can rely on Fibonacci tools such as Fibonacci retracements, Fibonacci projections, and Fibonacci extensions. So we're going to try with an extension first. To find extension levels, we run a retracement from this swing high on 6th of March going down to the swing low on 11th of March. Key extension levels sit at 127 and 161%. So this is how we've identified potential resistance areas beyond the multi-swing high resistance, beyond the intraday all-time high. So beyond that, we have a potential resistance barrier at around 23,800. That's identified by the Fibonacci extension at 127%. And beyond that, we have another potential resistance barrier at around 24,240, identified by the Fibonacci extension at 161%. Right, so take note, DAX looks to be pulling back. If this pullback extends even deeper, perhaps to the intersection here that's highlighted between the Ichimoku cloud, the 23.6% Fibonacci retracement, and the pivot, should we see the index stabilize within this zone, it can help us identify a potential opportunity to go long on the DAX. And then should we see a rebound play out quite nicely, we can then target the first resistance at 23,358 as the first potential take profit target. And of course, should we see this index climb even higher, I would then use the extensions at 127 and 161% as potential targets as well. Now, before we wrap things up, I would also like to highlight I think there's a couple of ascending trend lines that I would like to highlight. That's the first one here. Beginning from this swing low on 5th of August, we can see the DAX has bounced off this ascending trend line several times, most notably in November of last year and December of last year as well, and early Jan. Right, this is a pretty significant ascending trend line to take note of. And there's a second one as well that I would like to highlight beginning from 13th of Jan. Right, so for now, this is a pretty decent one as well, not the strongest ascending trend line here. Right, a couple of bounces here on 11th of March and 14th of March, and then again last Friday, 21st of March as well. So take note of this ascending trend line, right? This second ascending trend line, if it gives way, then we're likely to see the DAX fall quite strongly towards the pivot here, and hopefully we can expect this index to stabilize within this zone. And if that were to happen, we've got a potential bullish bounce opportunity for the DAX here. Perhaps maybe by the middle of this week or end of this week, if we do see a deeper pullback take place. All right, so I think that's it for today, right? If there's no further requests, right? Thanks everyone for tuning in to today's live analysis session brought to you by IC Markets. Do look out for all upcoming webinars for the remainder of this week, where we've got live analysis and educational topics in English, Thai, and Bahasa, right? Thanks everyone for tuning in. Take care. Have a great trading week. Thanks for smashing the like button as well as giving your responses in the poll as well, right? Wish you all the best in your trading journey and looking forward to catching all of you at the next session.